Hello, everyone. Good morning, good afternoon, good evening, wherever you are, whatever your time zone. Welcome. This is Digital Transformation Talk, and I am your host, Kevin Crane, coming to you once again, as I mentioned yesterday, from deep in a Marriott in downtown Portland. We have been hit here in the United States in the Pacific Northwest with a historic ice storm. So we've been hunkered up in the Marriott for about a week. Surviving though, and we are going to soldier on today with a great panel of guests and some great content for you today. This is the third in a series of three special episodes this week that features events happening at the World Economic Forum in Davos, Switzerland. I'll be joined by a great panel of guests, and in the first part of the show, we'll see a quick video from Davos, and in the second half, we will be discussing the topic of delivering digital transformation in banking. With that, I'd like to just bring aboard our guests today, starting with Peter Hazu, Director of Business Development for Financial Services at Microsoft. Peter, are you with us?
Yes, very well. You have the ice storm. I'm up in the high Alps, and we have rain, unfortunately, but there we go.
Well, Peter, I tell you what, we would take that rain in a moment here in Portland. But welcome aboard. It's great to speak with you today. Also joining us today is Paul Hewitt, Global Lead for Data Analytics and AI at DXC Luxoff. Paul, are you with us?
I am indeed. Great to be here. Looking forward to the discussion. And to complete the diversity, I'm in the west of England.
All right, very good. It looks like you are frozen in, but I tell you what, I'm going to put a nice palm tree in my background because that's what I need right now. Well, very good. We have a lot to cover today, some important topics, but I do want to start us off with our news item, or indeed our video clip from Davos. We have an interesting clip from the CNBC panel on our banks ready for the future. So, gentlemen, let's go ahead and view that clip now.
How are you using AI? How are you embracing it?
I mean, we're trying to do our best. It's a lot of experimentation all over the company. I think we all share this. We're trying to figure out the right way to reap the real benefits, which are the disruptive ones, right? So because the way I see it is, and I'm glad you mentioned the fintechs. I think it's an interesting topic. The way I see AI is that it's not at this stage, and I might be wrong, but that some new fintech based on AI is going to take over anything on our end. Is that it makes the technological competition within the walls of us, right? Within the regulations, within the traditional banks, universal banks, etc., much more disruptive potentially, right? Because it's going to come from within, right? And you can imagine, from a cost perspective or client or risk management quality in the end, you may imagine, profound changes that would make the competitiveness of one of us really different from the others, right? And this is the risk and the opportunity, frankly, to watch. And therefore, we need to both experiment, but also find ways to make sure that somebody and some buddies within the company think in a challenger way about the existing organization and the existing, pre-existing realities of both operations or ways to approach client quality or risk management. And so that's what we're trying to figure out, try to understand how we can focus the efforts on where it's going to matter most from a competitiveness perspective.
Gita.
All right, very good. Interesting clip and some interesting comments there on the use of AI. I liked some of his comments there. Paul, I'd like to start with you, if I may. What were your thoughts on the comments in the clip?
Well, I think it very much highlights that AI is still a new and emerging technology and evolving and developing very rapidly. And no one is really yet sure of exactly how it'll play out. What we do know is that it's a very general purpose tool with a pretty wide range of applicability. We know that it's going to be transformative. We don't yet know all the myriad ways in which it'll be transformative, and for that reason, I very much agree with Slawomir that experimentation is key, especially at this stage in the evolution. But by the same token, it's also true to say that guardrails are key, and getting the balance right between the right guardrails, so facilitating innovation, but still staying within the bounds that are imposed by regulations and by business is really important. And as such, it's important for the banks to, I think, for banks to adopt the right frameworks, make sure that the strategy is correct, and that's going to be a difficult task because we don't yet know where it's all going. But certainly, it's fundamentally important to encourage experimentation at this point, simultaneously trying to limit the risks. So that's maybe a quick highlight for me, but I thought it was a great topic of conversation from the panel.
Paul, you're interesting that you're commenting about the need for experimentation while at the same time maintaining some guardrails. How should banks be sort of putting that balance together as they do explore the possibilities here in the next coming months?
Well, I guess there are a couple of different areas and different ways to approach it. But for us, one of the fundamental ways, first of all, is to make sure that there's let's say, an enterprise-wide view of where AI is being used and how it's being used. We know that there's a lot of legal risks attached currently to Gen AI, for example, and that's just one small example, and there are many others. So it's important just to have a central grasp on where AI is being used and which particular types of AI are being used. So I think probably the biggest practical danger at the moment is that somebody inadvertently does something that creates a liability. So for us, that's the one important area. And simultaneously, together with that, it's important to have the legal side sewn up. Gen AI has been all over the news, all over the headlines over the last year or so, which is good. It's great for the industry, but it also means it's attracted a lot of regulatory attention as well. And I mean, the Global Risks Davos 2024 article or a document highlighted that very much. Misinformation and disinformation being number one in the list. So the regulators are paying a lot of attention at the moment. There's a swathe of regulation coming down the tracks that will hit all of us. So it's important just to maintain, at least to begin with, that initial grip on who's doing what within the organization, and at least prevent some of the more egregious misuses of the technology.
All right, very good. Now, Peter, it was great. It seemed like a great panel there, the CNBC panel. Unfortunately, we were only able to provide just a short clip. What are your impressions of some of the comments made?
Well, actually, if anybody can watch the whole one, I think the whole panel was actually a very good one to listen to. But I think he was exactly right about, as he put it, to figure it out. I also want to comment, Paul, I think, has it just right. I think there's a distinction as well between AI and generative AI. And of course, generative AI is very topical in the world, in our lives, and indeed at Davos this year. But AI is an enabler, and in fact, it's infused in everything. It's infused in banking and has been for a long time, AI. You can't really effectively prevent financial crime, for example, looking at vast data sets unless you discern it using artificial intelligence. It's too much. People can't weed through such large amounts of data to find potential financial crime, of which there is a lot of threat in the industry and to our lives that way. So that's one point. And then, of course, money laundering, again, anti-money laundering, looking for trends. So AI is already infused in everything. I do think, though, that the focus on generative AI is accelerating bank consideration about the role of a bank. And I'm a former banker. I believe banks are here to stay. I think they play an invaluable role. I think, as Sergio Armotti in that panel put it, as a cog in the wheel of commerce. I think it's super important. But I think that the whole evolution of the role of banking, given AI and now generative AI, is changing. And it's fundamentally, I think, changing on two vectors: bank business models, how they make money, and what they do to serve clients, to be client-centric, et cetera. And then also operating models, efficiency, operating efficiency, how they work, the cost base, all those other. So it's really on those two vectors, I think it's very key where AI plays a role. In particular, talking about AI, it's really talking about data. Data is at the essence, where there's so much in today's press about payments, for example, but payments is not about a widget that gets processed by a bank or a company. It's really about the underlying data and insights. And I think part of the change in the business model that's coming to banking is that banks go from being a traditional two-sided model, take a deposit and make a loan, for example, to being a three-sided model where the value of the data is really central to how the banks serve their clients. It's not just for their own needs, for financial crime we talked about, or it's really how they serve their clients. That data is relevant to clients, and banks can be really providers of value that way.
And I very much agree with that as well. And I think Slavomir's last point was quite an interesting one. I think he said something like focus efforts on where it matters the most from a competitiveness point of view. So from a bank, I think a lot of banks are shifting from regarding AI as something that you invest in for the future, and as Peter was saying as well, to being something that's just part of the normal course of business. So as you go forward, and especially with some of the newer and very popular AI technologies, it's important to figure out where that money can best be spent from a competitiveness point of view. And what competitiveness is going to vary a lot from team to team. So for some teams, it's going to be helping analysts summarize vast quantities of offering circulars. For other teams, it'll be how do you best improve and facilitate the retail origination process? For others, it'll be predicting defaults and delinquencies. So the definition of competitiveness and where you can best apply your dollars to improve your competitiveness is very much going to vary from institution to institution.
All right, very good. Well, I do want to explore some more of these topics here in a moment, but that great clip from Davos today, and as Peter mentioned, if you can see the entire panel, I think it's worth your time. But let's move on to our discussion, bulk of our discussion today. And we are here today to talk about delivering digital transformative change or transformation in banking. I think it's an important topic that we have covered on the show in recent episodes. It's important because analysts like McKinsey and others tell us that only about 30% of banks have undergone a digital transformation, that have undergone a digital transformation effort, have been successful. Majority fall short of their objectives. Many experts indeed warn us that the financial services industry is behind the curve when it comes to digital transformation. Indeed, one of the reasons that banks are looking to transform, as Peter has mentioned, is customer experience, enhanced customer experience, working to provide a more personalized and relevant and convenient service to customers. This can lead, hopefully, to competitive advantage. You mentioned payments, Peter. Things like mobile payments, robo-advisors, blockchain-based solutions can give banks a new competitive edge. And of course, always looking to things like efficiency and cost reduction, automation of processes, and so forth. So I want to get into our three discussion points today, but gentlemen, do you agree with McKinsey and others that banks perhaps are financial services industry in general is perhaps behind the curve, or is that hogwash?
I'll take a lead on that one. Look, banks have always been innovative. Technology and computation in computers, the banks were at the dawn of that. Data processing is the old terminology was used. So banks have always been, in a sense, at the forefront, but they're also large organizations. And I think what maybe McKinsey was getting at, and we'll get into the discussion about how to succeed with partners or in technology projects, it's all about change management. And any large organization, indeed even a small organization, change management takes a lot. So the words that get thrown out around digital transformation, I mean, it's all very true. It's really about being relevant to clients and having a forward direction that leverages technology, not because it's a bunch of cool new stuff, because a lot of the fundamental needs of people in the economy, individuals in retail and companies and corporations, working capital, they're not that changed. All this new technology really has to be viewed as an enabler, including cloud technology, which does have a lot of powerful tools built into it. So it's not just about a data center and computation in some notional cloud or something like that. It's really very real, the tools and what can be leveraged to serve clients. And I think it's around change management in these different things.
And I think I'd agree with that as well. And it's also just worth mentioning that, as a blanket statement, I don't think it's fair to say that the banks are lagging behind or anything else like that. I think most of the banks have taken, well, in many cases rather perhaps, the banks have taken quite a targeted approach, and it's been quite differentiated depending on exactly the nature of the requirement. So core banking payments transactions, for example, a lot of those are still run on mainframes because at the end of the day, it's still really hard to meet the mainframe latency requirements. There's a lot of fraud checking that is still not quick enough, and that is improving. But so there are things that you can't, or the people haven't been able to migrate onto the cloud timeously. Co-location on exchanges is another one. So there are things that can't yet be migrated. The no-brainers, I think most people are already migrated or in the process of migrating. So I think there's a little bit of nuance and finesse needed in evaluating the overall status of the industry. So that's the first thing. And perhaps the second thing is, I mean, there are obviously sort of high-profile failures from time to time. People not meeting their performance objectives in doing a cloud migration and the like. But oftentimes, if you drill down into those, it's not the fact that it's a cloud migration that caused it to fail. It's more basic stuff than that. It's people haven't documented their processes correctly, or everything's too manual, or you don't have proper CI/CD. Those sorts of things. So it's usually more prosaic reasons than it being the cloud that's caused a failure. So I think it's a slightly more nuanced answer perhaps than is commonly out there.
I suspected that you folks would have that perception. I'm always very skeptical of those sort of blanket statistics and so forth. But we are hovering around our first discussion point. And so I want to get into that, our first discussion point today, and that is data and AI in the cloud. So gentlemen, how can the confluence of the cloud and AI and data really help banks harness the power of digital transformation, especially when it comes to big data and analytics? Peter, what's your thought on that?
Yeah. So first of all, we live in a data economy. I mean, that's a number of the big changes. And we talk about cloud computing. The lesson of COVID and many other things is agility. And so the banks are moving from a very fixed, structured on-premise world, coded a certain way, and according to a certain model and the way they're very used to. That is the history of banking in the past 30, 40 years. It's served the economy well and commerce well, but the world around us is changing, and the needs and expectations of individuals and of businesses now are quite changed. So there has to be a bit better focus because everybody wants the value that's in the data. I've come to learn that there's value in the data. Again, it's not about processing the payment. It's about the contextual nature, the predictive nature. And from a banking point of view, that kind of predictive nature also reflects upon counterparty risk. So risk is a big thing, and banks are in the risk game. As Walter Wriston said, the ultimate four-letter word is risk. So that there's an element of that, and the some new technologies, some pre-existing technology around both AI and Gen AI play a huge role in that. And we'll get on to a discussion about operational efficiency and how that works. But I think it's a lot about the evolution and the speed at which banks are necessarily taking advantage of these new technologies to modernize how they serve clients. I think that's really what it comes down to. And it's those shifting of gears are not the easiest thing. Microsoft speaks with banks all around the world and across across actually all industries, not just banking industry. And so there's a lot of best practices and how this works and what the hurdles have been and why it's been slow. And, there's so many wives' tales about why that is, this and that. But in fact, it is the generally accepted trajectory for modernization to take advantage of those new operating models that have to be for banks to be relevant, and also the business models to do that, and also the operating models in which they must operate to serve clients, I think.
Yeah, and I think also there is a little bit of the momentum certainly is shifting towards the cloud. And one of the consequences of all of that is that it allows banks, and for that matter many other organizations, to shift their focus away from, let's say, the nuts and bolts or the low-level infrastructure, things they shouldn't necessarily be focused on as a core business. It's allowing them to lift up a little bit and deploy more resources into areas where they should be deployed, and that is more looking at the business application side of it. 100 years ago, 150 years ago, many companies created their own power supplies. Now nobody does that. You buy it from a utility, and I mean that's one of the old analogies behind cloud, but it's still true, and it's still valid. You want people to focus on the business related aspects rather than the more generic sort of aspects that pertain to everybody. So that's the one side of it, and that's perhaps pretty well known, I think, by now. But the other side of it that's also worth mentioning is that from a complexity point of view, from an IT complexity point of view, one of the things that makes IT expensive and complex is when you've got too many different components, and when you've got data living in too many different places. So if you can simplify that, if you can put all your data in one place, or all your components in one place, or standardize your components and reduce the amount of complexity that is inherent in your IT operation, you have a big one. And that is a large but often very hard to measure benefits of consolidating onto one particular platform or area, whether it's a cloud or similar sort of platform. But if you can reduce that complexity, you've reduced your total cost of ownership over your horizon quite significantly. And for us, that's very much a major advantage. Get it all in one place, and you'll have a lot of happier people.
Gosh, so right, Paul, because actually banks, in order to serve client needs, have been layering onto their old technology ever more demands for feature functionality, just adding on top. It's almost like you wouldn't build it that way today. One reason the challenger banks are so challenging is that they're designed in a much simpler way, in a box, more standardized, so they can really focus on what banking is all about: the franchise of clients, or risk domain, understanding of risk domain. But all of this, a mass of layered new feature functionality, makes for quite a complex environment. And then, of course, in order to go for scale, bank mergers, and then you've got a combination of different systems never quite straightened out. And so it leads to a lot of complexity, and it's unwinding that complexity. And I think that is a process that is underway only in a certain respect, but I think we'll pick up a lot more pace because the new technology makes it so much easier to do, both in terms of programming. As we know, with the new technology, it's a lot easier with generative AI to program, that kind of thing. That's one element, but just generally the need to figure out how to simplify and not having all the banks doing all the same things, leveraging off of common infrastructure, cloud infrastructure being one, but leveraging off of common things in order to get that dross of distraction and complexity out of the way. I think it's a big trend. It's a super area, I think, that the banking industry really is heading.
Well, I want to talk about where the industry is heading. That leads us to our second discussion point, and that is managing performance to future-proof your banking business. We've been talking about business models using AI to generate business value. But when we talk about future-proof, this is another sort of term that I'm skeptical of or confused about. Paul, what does future-proof mean to you?
Well, I guess for me, it's not about the technology necessarily, although the technology is an inherently important part of it. It's looking at the overall operating model, and looking in particular also at the alignment to business. So if you want to future-proof your banking business from a technology point of view, it's really important to make sure that the conversation that is had is one that's very much aligned to the business, and that is oriented towards business metrics. So for example, if you're looking at fraud and fraud processing, you want to be aware of to take one sort of fairly simple example, you want to be aware of how many people are in your fraud referrals area. So if you have the capability to manage, let's say, 2,000 referrals a day, that has an implication for your false positive rate in your detection model. You can't be sending 4,000 referrals from your model if you've only got the capacity to deal with 2,000. So the backdrop to all of that is that the measurement of processes and the measurement of costs and efficiency needs all to be in business-related sorts of language. So what are the costs, what are the benefits, what are the metrics that are being used to drive any investment in AI and IT, and how can we make sure that we institutionalize those processes? If you institutionalize the processes, the technology will follow fairly naturally. So for me, managing performance, should be done very much through a lens of managing business performance, and using that as a driver for your AI investment and your IT investment processes. So that gives you your optimal investments, and that's where that's what drives it. So at a high level, perhaps that would be my start point of view.
Now, Peter, when I think about future-proofing my business or future-proofing a banking institution, I'm thinking about the future generation. I'm wondering, in what ways can banks reach a new generation of customers, a new generation of digital-born customers, and how is that done in terms of future-proofing my business model?
So really, I think the terminology we're using may not be correct, because future-proof is not an endpoint. It's an ongoing thing. And I referred earlier to the lesson of COVID, black swan kind of event, is that actually the future is unpredictable and it's changing quickly. And you mentioned quite rightly, the new generation and their adoption of technology, but I think it's far broader than that. I think the role of banks can and should change. I mean,
Really?
some banks
In what
will
ways?
go
In what ways?
well, and I think it comes to the business model and what they always do. So the banks have particular expertise. They've got franchises of clients built up over long periods of time that they serve. They traditionally, the modernization of customer experiences, because banks had lousy customer experience. Bank was a place you went to wait online to get something done. Now, of course, embedded finance, where the banking system is coming into the heart of the economy, could be with consumers, could be with that new generation you referred to, or in the largest multinationals and how that all works. So the role of banks in terms of embedding, but playing to the expertise of their domain experience in lending, et cetera, I think that's where the big change will come. And actually, I think it'll also blur the old-fashioned lines about what a bank does. I think a bank will be a bank. The threat that banks perceive from 10 years ago, oh my goodness, the fintechs are going to take over or eat our lunch, I think was the expression. I'm not sure that is really the right model. It was a good wake-up call, perhaps, but I think it's always considering relevance and how it serves. So for example, supply chain, and we're seeing a lot of the global threats right now, again, as we saw previously with changes in geopolitics and whatever. But the role of banks when it comes to the fact that we live in a data economy, and what a bank does is really in the data realm, should be, and increasingly, how it will actually serve clients and how clients perceive the value of a bank will be about that data. And I don't mean selling data. that's not where the value is. I think data has to be thought of in a different way. And there's a lot of new technologies. I think banks have a lot of bright ideas about how to leverage this. It's just in the traditional model it didn't come out really, I think, and to be developed. But I think that's all changing now.
Mm. And I think there's a lot of new areas coming in. I mean, you mentioned one of them there, the supply chain, and generally speaking, there's a lot of other stuff coming in also, which is perhaps related to it. ESG, for example, and ESG reporting, and there's a bunch of new ethical considerations that people need to take into account. So the world is evolving pretty rapidly, and there've been a bunch of well-publicized incidents with decisions taken on an automated basis that have gone wrong for one or other reason. So the future proofing for me in the banking business, and it perhaps also touches on what Slavomir said, is maintaining that sort of experimental mindset and that agility and that ability to change as the environment changes. But once again, it's the difficult balance to strike is not being too restrictive internally while still maintaining a certain sort of fairly fundamental level of safety, and making the improvements internally that give you those elements of comfort and safety, and yet still allow the growth. And one sort of concrete example that we see quite often is there are a lot of people who have maintained good software development lifecycle processes for quite some time, and it's embedded into the culture, and that's all great. But the next step for that now is to move beyond that, because it's no longer sufficient to control and version control and manage your software. You also need to manage and control your data to a greater degree than before. So, for example, if a regulator comes to you and says, justify the following credit decision, you not only need to be able to display the model and all the model parameters and the history of the model and how it evolved, you also need to be able to display what data was used to train that particular model. So it's not you've now got not only the software development lifecycle, you've got the AI development lifecycle sitting on top of that. So it's the future proofing for me comes in sort of applying thought to what things need to change as institutional processes that allow you to develop as the technology and as the environment around you changes, and the demands around you change, both from a client as well as a regulator, as well as all the other different stakeholders.
And actually, this permeates, I think, all the way deeply into banks, right to the core banking platform. So banks started their modernization journey, I think, in the recent times with customer experience that had to be modernized in order to compete. But it really goes down to the fact that even the core systems of the bank are rich in data. That's the entire economy flows through banks day in and day out through payments and what have you. There's enormous amount of data, potential data, and now other kinds of data like unstructured data, sentiment data, predictive data we talked about earlier. So there's so many different things that goes right to the core of a bank. So I think it's a whole journey around this modernization.
Very good. Go ahead, Paul. I'm sorry I interrupted. Go ahead.
No, as I was going to say, it's pretty much in agreement. It's very much a journey. It's one it's in some respects it's only just started, and I think we're going to see a lot more development in these areas as we go on. And a lot of all of this also is going to be keeping in careful lockstep with the regulators and making sure there's a harmonious relationship, and making sure that. From a bank's point of view, the regulators are focusing on the right things, and from a regulator's point of view, the banks have got all the systems and controls. So it's an important area.
And regulation is not new. Banks have always been highly regulated, as well they should be. It's really other people's money that needs to be protected. And I think everybody does appreciate that when things like Silicon Valley Bank and what have you. I mean, there are deposits and loans, and it has to be protected. So it's always been a highly regulated. But with data, there are new considerations like generative AI, and so we'll see how that develops and plays out. But it's not like regulation is anything new to banking.
And I think for me, just as a more general aside, I mean, one of the truly unique things about the current sort of IT revolution, I mean, and there have been various IT waves and IT revolutions over the decades, but what's truly unique about this one is that it's got potential to change society on a very large scale. the misinformation and disinformation risk that was mentioned, it has the potential, and who knows if it's actually happened at all, but it has the potential to change elections, change people's sentiments, polarize society. So the stakes in certain senses for this one are unusually high. Not so much particularly for banking, but for digital societies as a whole.
I couldn't agree more. We are at a very important inflection point. We are here today with Paul Hewitt, Global Lead for Data Analytics and AI with DXC Luxoft, and also Peter Hazu, Director of Business Development for Financial Services at Microsoft. Gentlemen, in the time remaining, I'd like to move us on to our last discussion point today, and that is how an effective partnership helps overcome the risks of delivery or the risks of success with digital transformation. Back in December, I guess my question is in what ways are banks really leveraging partnerships to drive digital transformation, and how can we do it too? Peter, do you have a thought on that?
Well, certainly, I think the need for partnership. There's a lot of change in the world, and a lot of change in the ecosystems around banks. So partnerships, I think, form the core of that. Now, I think it's important because if you look traditionally, people consider other parties as vendors. And I think the concept of vendor is fine up through procurement. But after that, you better establish a clear partnership based upon trust, based upon openness, based upon good governance, based upon people. This is a people business. The assets of a bank and companies are not the loans, they are really the people. And so I think heading into change management that we discussed earlier and big projects that really are fundamental in a bank that touch everything and that have a lot of risk in those kinds of changes too, but are necessary changes. The key thing is that your counterparty, you view them across the table and consider them partners. Just ban this vendor thing because it's not helpful. You need to really know who you're dealing with, have the right escalation path, open communication. And Microsoft, we see this all the time in working with partners and working with banks as partners. That's the best practice. That's what works really. So I think that's how I would try to frame it. It's really, we're in this, you have to be in this together with your counterparty, your partner. And that's the right approach, I think. The ones that I've seen be successful, that's really the right approach.
And I agree with that. And from a DXC Luxoft point of view, we very much are a services provider. And for us, our partnerships are absolutely key to overall success, whether it's projects or business. And for us, those partners are both our clients, the banks in the main, but also very much the industry partners with whom we deliver services and solutions. So, Microsoft is one of those. And for us, both, that tripartite relationship is key. We need to have relationships with other collaborators on project delivery, as well as with the clients. And I very much agree with Peter. It's really important to be sitting across the table. It's important to have multiple levels of the relationship. It's not enough just to have a procurement relationship. You need to be having a dialogue with people up the chain, and ideally, if the infrastructure need is large enough, it should be up at the COO level or CFO level as well. People should have visibility up and down the chain of what's happening. And the benefits of that are that you solve problems much more quickly. Your path to delivering value is much smoother. And we spoke earlier about future-proofing the banking business. This is one of the ways to future-proof is make sure there's a clear, open, well-defined relationship with the various partners. Invest in the relationship, and that very much helps with delivering existing projects as well as future-proofing new ones. So.
Interesting perspective between procurement and a vendor and having a partner. It's easy enough to have a vendor, bring them on board, and then just start calling them a partner. What should I look for in a good partner, and how do I differentiate those that are going to be a great partner and those that are just going to be a vendor that calls themselves a partner?
People and trust.
People and trust. What do you mean by that?
Well, you've got to have trust in the people. You have to have, and you get there by having an open dialogue. So you really need to rely on your partner, and they need to rely on you. There has to be a spirit that you're really in it together. At least that's the best practice where I've seen this work the best. And we talk to banks all around the world. So that would just, my off the cuff advice based upon experience.
Yeah, and it's all about the relationships. You want to be spending time with the people, getting to know the people, developing a relationship. It shouldn't be about, here's a rate card and how much this is going to charge you to do that. I mean, that's not enough. You want the benefits of the insights that partners can deliver, because partners often have a perspective right across your industry as well as across a multitude of other industries. So you want to get the benefits of that. You want to be in a position where you can pick up the phone and say, hey, look, this has gone wrong. I need you guys to fix it. I don't care what's in the contract, but let's sort it out. You need to be able to have those sorts of conversations. And if you, at that point, you're in a good place.
Now, when I think of great partnerships, I think of the ability that they bring to me for more diverse expertise. I think about having greater flexibility with a good set of partners, maybe achieving greater scale. When it comes to digital transformation for banks, what kind of partners are really needed and when?
Well, you sort of characterized it a bit there. The issue is that all of this change requires diversity of talent, and that diversity is super important. And one may or may not have that in-house. So one should rely on partners that may have that too. So it becomes a mix of the people and the talent in order to pay. No one's got the single answer. My mother always said 2 minds are better than one, and that concept obviously magnifies into large organizations. So I think that's, especially with the new digital technology. I'm not saying it's all about youth. It's not about that but different just the diversity of people will have different views about how this works, and one should be very inclusive and thoughtful about that.
Mm. And a good way to look at it is it's an extra pool of resources. It's an expanded virtual team. So the more leverage you can apply to it, the better. And if you've got that combined understanding, both from a technological, business and regulatory point of view, again, that helps a great deal and puts you in a far better place to deliver.
All right, very good. We are here with Paul Hewitt and Peter Hazu. We're talking about delivering digital transformation and transformative change in banking. Gentlemen, we're almost out of time, but before I let you go, I do want to ask each of you if you could please provide us with just one quick action item that our viewers can use to take advantage of the ideas and advice today. Paul, do you have an action item for us?
I would say, if you haven't done it already, have a look and see if you can form a catalog of AI usage across the enterprise. That would be a good starting point. And overall, I think most people have done it already, but have a fairly careful look at that balance between trying to put in the guardrails while still maintain the flexibility for innovation in what is a rapidly changing world.
All right, very good. And Peter, what's your action item for us today?
Banish silos. Data is an enterprise-wide concept. It's valuable across all lines of business. And I come from banks that were brought up in product silos. They were great. It was, it's really what gave our area a P&L, something to work for. It's the tradition of the past 30, 40 years in banking about how to optimize and make money. But actually, data is far broader than that. And that's one of the great lessons from the fintech world and how they started all of this in the new sort of digitization revolution is they didn't think in terms of silos. They think more broadly about the value of data and how it can be able to work. So I think, my advice to bankers is really think outside the box. It's not what that data point, what you can charge for it or something like that, charge for an MT940. And that's not what the game is. Think more broadly.
All right, very good. We have been speaking with Paul Hewitt from DXC Luxoft and Peter Hazu from Microsoft. Gentlemen, it has been a great discussion today. Thank you. Your comments and ideas are spot on. I do hope that we get a chance to talk again soon. And to everyone joining us today, thank you too. Please join us next week on the 23rd of January at 4 o'clock GMT, when we will talk with another great panel of guests, next time talking about accelerating business transformation through data-driven insights. That should be another great discussion. Meanwhile, if you'd like to find me, you can do so on LinkedIn. I'm happy to connect there and check me out. And you can check out my weekly podcast, the Digital Transformation Podcast. But for now, Peter, Paul, thank you once again. And everyone, thank you for being with us. That will do it for this episode of Digital Transformation Talk. Until next time, I'm Kevin Crane. Thanks for watching.
Thank you.